Welcome everyone. Today I want to cover three main topics. We're going to talk about Delta and Uber's partnership. We're going to talk about Ford Mustang losing sales to itself, and Microsoft and its integration of AI into agriculture of all areas, right? Now, I invest in Microsoft. I'm considering an investment in Uber, and Ford was a company I invested in at one time. So I'll give my thoughts on all of those. Let's start with the Delta and Uber partnership. Now, Delta Airlines SkyMiles members will be able to earn miles for Uber rides starting this spring. And with this new deal, the airline is ending an 8-year partnership with Lyft. So they're making a big change, a big move. And I think I know why. Uber is just the dominant play here. They have a lot more market share. And Delta, of course, as a company and a business, wants to take advantage of that. Now with Uber, the CEO said, with a record number of travelers taken to the skies, we're focused on helping to make your airport travel journey as efficient, affordable, and effortless as possible. I think consumers are going to really like this. It's going to create some savings and some efficiencies. And let's face it, anything that comes with convenience is going to win. That's how I see it. That's why when I look at companies, I think of how are they adding convenience to people's lives? And I think this is going to do so. So this is great for both Delta and Uber, as it will help both companies increase customers and users and help keep those users in their ecosystem, because they're kind of starting to widen it a little more. Now, I have been thinking of investing in Uber lately. I'm really liking this company, and they're making some great decisions. They have this huge giant market share in their industry, and I say those with a wide moat that have that competitive advantage, they usually win. And that's what we're seeing here. They're gobbling up market share. They're kicking out competitors like Lyft. And I think we're going to see the slow death of Lyft. That's just my opinion. Dominance of Uber is going to continue to grow. So that combination, I think Uber is just going to be the clear winner. Just like Netflix won the streaming wars, Uber's going to win the ride sharing wars. And that's why I like to focus on companies with wide moat, those with monopolies, duopolies, or triopolies, and with the majority market share. They are the strongest companies, the ones that will be able to expand the fastest, reinvest their money because they are profitable. They'll be able to innovate and grow fast. So that's what we want, and that's Uber right now. They're growing into that, shall we say. Now let's give you some numbers. Lyft had 24.4 million active riders as of the end of third quarter and booked more than 216 million rides on their platform, ending the month of September 30th. Now that's an increase, and it's a record for them too, but it's an increase of 16% from a year earlier. Now, Uber, for comparison, had 161 million monthly active users. That's more than 120 million more than Lyft, and they posted more than 2.8 billion rides with a B. And that is impressive. That means they're growing fast. In fact, they're up 17% from a year earlier with that number. So in comparison, I think we're seeing just popularity of ride sharing and, delivering of food and stuff like that. So that's why both companies are doing well. But Uber's, for as big as it is, much bigger than Lyft, it's growing faster. And that's just showing that they're the ones that are in first place, and they're taking a lead and they're expanding that lead. And I think Lyft is going to have a hard time over the next couple years. We'll just see if it's a company that survives long term. The other thing with Uber, not only that, but they just announced a deal with NVIDIA. So they are going to be joining a strategic partnership aimed at advancing AI-powered autonomous vehicle technology with NVIDIA. Yes, big NVIDIA. So the collaboration will leverage NVIDIA's platforms to accelerate the development of autonomous driving solutions. By combining Uber's massive data with NVIDIA's AI technology, both companies plan to create more efficient and scalable AI models for the industry. Now, Uber's CEO said, by working with NVIDIA, we are confident that we can help supercharge the timeline for safe and scalable autonomous driving solutions for the industry. Now, let's look at the price targets for Uber. This one is almost in the buy range. It's high on the outperform range, and it has an upside potential of 38%. It's right now in the low 60s, and they're saying it can get to about an average of $90 per share. This is one, again, I'm considering, But before I tell you why I have not bought yet, let's look at NVIDIA just for fun since we're talking about them. This one's actually rated a buy and has a potential upside of 23.47%. It's in the $140 range, and they're saying it can get up to about an average of $175. This company is overvalued, and they're still recommending it as a buy, and I think that's because NVIDIA itself is producing a lot of great news for its future. And so, yes, I think NVIDIA is a powerhouse, and long term, I am believing more and more that this company is a great investment. So back to Uber. Uber's CEO has been making some great deals lately, and I see this as a great investment opportunity. My only hesitation, and why it's not in my portfolio yet, is competition is still fierce from the likes of Tesla and Google's Waymo. So the risk is a little too high for me at this point. I'm going to keep it on my watch list, and if I feel that they continue to make these great deals that should solidify their future more and lower that risk and increase my confidence, I might just buy in. But of course, sometimes if you wait for that, it's a little too late. The price might skyrocket. So I'm debating. Let me know if you're invested in Uber or are considering it. Would you jump in now with this news? Or do you think, like myself, it's still a little too risky and you might just wait on the sidelines for a bit more? So now let's talk about Ford. As mentioned, the Mustang sales are declining, but they're also increasing. What do I mean by that? Well, Ford Mustang Mach-E sales surpassed traditional Mustang. So consumers are moving from the traditional Mustang to the electric Mustang, something many probably thought they would never hear. Now, Ford released sales data last week and showed that 44,000 traditional Ford Mustangs were sold in 2024. That was down from 48,600 the prior year, which is a 9.5% decrease. By contrast, sales of the Mustang Mach-E were up 26.9% from a year ago, rising from 40,700 in 2023 to 51,745 in 2024. And let's put that in perspective again. So in 2024, the traditional Mustang came in at that number of 44,000, where the Mach-E came in at 51,745. That's a big difference, and that's allowing them to make some pretty good sales compared to the traditional Mustang, an increase, shall I say. Now, the rise in these Mach-E models, the Mustang models, occurred as Ford's electric vehicle offerings set a new record with 291,000 electrified vehicles sold, including hybrids and fully electric vehicles. Ford's EV sales were up 38% in 2024 from the prior year, and they topped rivals like GM. So Ford is actually showing us that they are starting to show some excitement with their potential in the EV race, but they're still far behind Tesla in my opinion. Now, Ford attributed some of the rise in EV sales to the Ford Power Promise, which is a program that includes a complimentary home charger with standard installation for no extra charge, as well as access to a Ford advisor for EV support. I do think this helped them, just like they said, because I know if I were to buy an electric vehicle, that's a pretty important thing. If it includes a free installation of a charger and some EV support, that would calm my fears and also get me to do it, because to have a second step, to have someone come install something like that, that's something that when you add the convenience, like I talk about, that Ford's doing, people are going to be tipped, a lot more people will be tipped towards buying electric vehicle. So Ford's main EV challenge remains bringing down those production costs. If they can do that, they really are setting themselves up to excel and really succeed in this area of becoming more of an EV automaker. Now, what does this mean for me as an investor? It shows me EVs are the future, and though many are against it, we have to accept the numbers. This does not make me bullish on Ford. Let me be clear. I rather say it like this. I think this benefits Tesla more because Tesla has such a lead in this space. If Ford's able to grow their EV sales, surely Tesla can with all the efficiencies and, advancements that they have. It's just the way I see it. So I would not recommend Ford as an investment, nor Tesla at this point. You can argue Tesla for me. I still would like to see it more diversified. Automotive revenue still makes up the majority of this company. And I don't invest in car companies. It's too cyclical of a business, and they have to deal with fast changing trends, high CapEx, and massive competition. So with Ford's price target, we'll see an upside potential of 22%, which is pretty decent, but analysts are saying this is a hold, and I agree. I would not be buying Ford right now. There's just too much competition, as I mentioned. So, electric vehicles, they are the future as of right now. So, I would look more to the chip companies and AI companies that will be supporting this industry's transition rather than the car companies themselves. That's how I would read this news and play it as far as investing goes. But let me know what you think. Is this making you more bullish on Ford? Would you put some money in there? For me, I like I said, I invested in Ford at one point. It wasn't a great investment, and through research, I just think car companies are ones I'm going to sit out. Next, let's talk about Microsoft and agriculture and AI. What's going on here? Well, Microsoft CEO drew attention to AI-powered agriculture for healthier, more sustainable harvests amid an $80 billion investment push. They just announced that, and that really helped up any kind of AI or chip company because, this is some serious money they're going to be putting out there to boost their AI side of things. Now, this project is called Farm of the Future. So what it does is it puts a metal structure in an area where there's a crop, right? And right now, Microsoft is in India, focusing mainly on sugar cane crops. So this structure acts as a weather station. At the top, there's a wind, rain, solar, temperature, and humidity gauge. At the bottom, there's sensors in the soil that measure moisture, pH levels, and electrical conductivity, as well as nutrients like potassium and nitrogen. The data is combined with satellite and drone imagery, as well as historical data, and analyzed to generate simple daily alerts via a mobile app. So it might tell the farmer to water more, spray fertilizer, scout for pests. A satellite map will also pinpoint exactly where each action is needed. That's pretty fascinating. Now, the goal is to do just the right thing at the right time to optimize growing conditions and claim the ultimate prize, a harvest where it is at its peak and will produce the most of whatever you're growing. Now, Microsoft kind of went and talked about a specific farmer in India, and they interviewed the farmer since using this AI technology, and he said that the growth of his crops is good and the leaves are greener and the height is more uniform. Microsoft also said that it produced sugar stalks that were taller and thicker, weighing 30 to 40% more at harvest and yielding 20% more sucrose. The plot where they grew this required less water and fertilizer, and the entire crop cycle was shorter, 12 instead of 18 months. So it's becoming more efficient and cost saving. Now, 20,000 farmers signed up for this program, but only 1,000 were chosen. And so we're going to see, they just started in mid-2024. So we're going to see after a year of data just exactly how good this is. But so far, it's proven to be very beneficial. Now, the technology, as mentioned, it brings in weather, soil, and other data from satellites, as well as farm sensors onto Microsoft data platform called Azure Data Manager for Agriculture. Now, Azure is one of the main reasons why I invested in Microsoft. I like the cloud side of it, and then here came an AI, boom, it was a winner for me. I'll show you my portfolio at the end, just how much growth Microsoft has provided for me. But this shows farmers precisely what's happening in their farm with a few clicks. So farmers are going to be farming from their phone rather than going out into the field. That's kind of a crazy thought. So really, this AI project is taking the guesswork out of farming. Now, farmers can check on their farm by their mobile phone every day, and many are saying that that's what they do. It's becoming a habit now. And like anything with AI, this app will get more accurate the more it's used, and they're thinking it can attract the youth to farming, something that they're having a struggle with, and that's another solution this AI platform can bring. Now, Microsoft said, think of the next wave beyond the green revolution. We're at the cusp of the next big disruption in agriculture with AI and data. So AI in farming practices is occurring. Who knew AI would help farmers? But here we are. This shows me AI is the future, the next big thing, and I'm happy I invested in Microsoft, and I recommend you get into some AI plays. Take a chunk of that new market that's going to explode in the future. Now, with Microsoft's price target, we'll see they're recommended as a buy. I think Microsoft's a little overvalued right now. I haven't bought in a while, but there's going to be some point where I buy again. So any weakness, I will buy. Right now, it's in the $420 range. If it dips below $400, I definitely will buy, but I'm really considering just adding kind of regularly because Microsoft, to me, long-term is just going to be a winner. So right now, this stock has an upside of almost 20%. Now, Microsoft is aggressively investing in AI infrastructure, and its AI business segment is producing nearly 10 billion in annual revenue. So imagine 5 years from now, 10, 20 years, what this segment will be producing for Microsoft. I think it's going to really be beneficial for Microsoft and provide the investor some massive gains. So let's look at my portfolio. I'm up almost 31%. It's kind of been in this range for a while. Real estate's been my big loser, but you'll see the AI plays I have, which are Amazon, Microsoft, S&P Global, and Health Equity. Those are my main AI plays. And with Microsoft, it's been an excellent investment. I'm in the green a little over 78%. Of course, Amazon's really been on fire. It's over 100% in the green for me. But what I see is another opportunity, and that's in the railroad industry. Just like in the farming, I think any industry can utilize AI. It'll help it just become more efficient. And this is something I'm very excited for. So I think it will benefit Union Pacific as well, but that's not the main AI play. It's the other stocks I mentioned. And then real estate for me, I'm sure they'll incorporate it somehow, but they're not the big players. They're not the ones I'm focusing on for that. So let me know what you think of Uber, of Ford, and Microsoft with these events, these news items that are happening. Do you think it's going to be very beneficial for their future? Do you hold any of these stocks? Are you considered buying any or maybe even selling any? Let's talk about it all. For me, Uber, it's a few times I've been close to buying. I just haven't done it yet. But it is on my watch list. One of the many stocks that I'm considering buying this year. I want to add two at least. And then Ford, I would not invest in, but that's just showing me that EVs are the future, but really it's the chips, the chip makers, and the AI side of things that's the exciting part that's going to help the change with this industry and make it more profitable and efficient, etc. So those are the companies I'll invest in. And then Microsoft, what can I say? This company is an excellent investment. They just have the perfect balance of diversified business segments, profitability, and growth. I really like this company, and it's going to be one I probably hold forever. So let me know your thoughts again. I hope you guys have a great day. Happy investing. We'll see you soon on Mark Arnold's Finance.